Good morning, ladies and gentlemen, and welcome to another live trading webinar. Today is Thursday, 24th of August, and let's see what the markets, yesterday actually the markets during the New York session, they reversed against the US dollar, and we'll check the chart and see what happened a bit more in detail. So, as usual, this content is for general information only and is not intended to provide trading or investment advice or personal recommendations. And please make sure you listen to the weekly fundamental analysis on the podcast section. And if you are new here and you haven't downloaded the mobile application, please make sure you do that. So let's share the screen with the trading platform, of course. But before we go to analyze the market, let's see our friends here. Roland, how are you doing, my friend? Good morning. Ruben said, good morning, Theo. Good morning, Ruben. Larry said, good morning, Theo. I hope you are well. I'm very well. Thank you. I hope you are well too, Larry. Mladen said, good morning, Theo and Noel, as well as Alexander. How are you doing, guys? Mogiol, good morning, and Theo and everyone. Good morning, Mogiol. Mr. Carlos said, good morning, guys. Good morning, Mr. Carlos. Maria, good morning. Good morning, Maria. Rumen, hi, Theo. Hi, everyone from Rumen. Mesty said, good morning, Theo. Watching from the gym today. That's absolutely amazing. You made my day now. If you are watching from the gym. And from which country? Can you tell us where are you watching us from? Raquel said, good morning, everyone, and hope you will have a successful day. Likewise, Raquel. Macro said, good morning, boss. Good morning, Macro. Marco, sorry, said Macro. Marco. Well, guys, let's start with the pound against the US dollar. And yesterday, the market found some support here. As we see here, it found support during the New York session and it reversed back to the upside. Mr. Nick said, hello, everyone. Hello, Nick. I hope you're doing well. If we zoom down to the lower time frames now, today it's a good day based on market structure to explain you about time frame correlations. Once and for all, I hope you're going to understand it. I explained it so many times, but I see we have new traders in this webinar, and I would like, as well as these guys, they learn, but you guys understand the dynamic of time frame correlation. Time frame correlation, it's not a trading strategy that you apply whenever you think there is something moving in the market. Time frame correlation, it's only applicable based on anticipation of the next market move. So what I mean by that, daily chart or even weekly chart, you see, guys, on the weekly chart, there is a noticeable level of support. Support is a price level that once price touched that level, bounces upward. If we zoom down to the daily chart and try to find an entry, yesterday, it was like the market was trading nowhere, and we said we are not interested in this market right up here. We wanted to see the price comes at an area of support, an area of resistance, and reacted. But on the hourly chart yesterday, it was this hammer slash gravestone doji, yeah, something like this. And okay, without the top here, let's just stick with the hammer. This price action here, right at this area of support, after a strong sell-off, when you identify strong sell-off in the market, once you see a reversal price action, it's a high probability signal. The reversal price action to come from a support. It's a high probability tradable signal to buy. Why? Because traders who sold this market aggressively, at some point they want to make their profit. We sell high and we buy low to offload the position to make profit. So at this point here, when other traders were trying to continue the selling momentum, a false breakout happened. And in this market, we could see it very clear with this price action. Actually, there were two attempts from the market participants to move lower. After this candle here, this bearish candle, then a doji candle below the support, and it got rejected immediately. So this is a very strong signal that market, it's about to move upwards. Until where? It can push upward until an obvious level of resistance, and it was somewhere here. We're not trying to get all this move here, guys. We tried to get something 2 or 3 to 1. Maybe we were out at this point here. We don't need to target necessarily the next area of resistance if we don't want to, but this is a very good example. Now, how to identify this opportunity and be able to trade this consistently. That's the issue with traders. They lack of consistency. You have to establish some trading framework. Like, if you will monitor many markets, you need to understand that you have the capacity to look at specific things at specific times. So if you're going to look at the hourly chart, you need to have the privilege of time to look the hourly charts. So that means every hour, at least for some time. Otherwise, you will miss the opportunities, and then you will start impulsively trading. That we don't want this to happen. Okay, now the next thing you have to understand, and if you will write this down, you trade, let's say, this market US dollars against the pound, the yen, and all this stuff when the US dollar is hot, and that's during mainly the New York session. So around 3 p.m. broker time, Admirals broker time, that's 1 p.m. UK time, we can start looking at the price action on the daily charts, because that's where the market's gonna warm up. That's where the activity will come, and it's gonna last only for 3-4 hours, no more than that. Do you guys understand? Next one. So after this move occurred yesterday, we expected today to see a continuation to the upside. We expected to see the buyers push the price higher until where? There is a strong level of resistance here. There is another level of resistance here, and there is another level of resistance here. So the room of opportunity, it's this much. Another trading error I see from many traders, they identified a high probability price action setup, but I told you many times, you must understand the room of opportunity, and that's the reward to risk. If the reward is not favorable, why to get into the trade? On the daily chart right here, the reward to risk doesn't seem to be in our favor. Question, Theo, Can't the market move upward? Absolutely. But this will move upwards by the market maker, by the big funds. We don't know if it's going to move right now or if it's going to play sideways and then it's going to move. And what's the problem with the retail traders like us? Because we trade CFDs product and we use leverage, we have obligations to the brokers and we pay swaps and fees. Now, is it something wrong? No, if you want to pay and is this part of your trading strategy, that's totally fine. But I'm happy to pay the swaps and the fees and the Wednesdays and the weekends rollovers, everything when there is when the market is shows a predominant direction and when it's trading towards a direction. Totally happy to get the trades, but to get the trades where I anticipate the breakout on the daily chart and stay in this trade for 5 or 10 days, trading days, it's an issue because once the breakout occurs, we must cover all this distance we pay as fees, and then we will start making the profit. So maybe the first 20 pips, they will be used to cover all the negative of the trade, and afterwards we will start making the money. But then where is the next resistance? Guys, please understand this. This is the fundamental of trading profitability, and 95% of the traders, unfortunately, they don't find success because either they don't want to understanding or they don't pay attention to what I just explained. And what I just explained is the root of solution, if you prefer. Why? Because if you don't understand what I just explained, then when you find any trade, you're going to be so frustrated and you're going to start trading thinking that there is an opportunity. Well, in fact, it's not an opportunity there. Okay, so please understand the fundamentals of retail trading, not just trade, the retail trading, and then you're gonna be very happy. Next one, Euro US dollar 4-hour chart. Sorry, daily chart. Remember, guys, yesterday, play the video again and listen to what I explained. Bearish engulfing at support. It's a misleading price action. We don't want to sell the support unless there is, generally, we don't want to sell the support. Okay, if someone is in this trade here and the price didn't make it beyond this strong support, we don't know if the price is going to push upwards and then it's going to break. If it doesn't break straight away, it's not worth, in my opinion, to be in this trade. Or if you want to keep a trade, at least take some good profits out of the trade, move stop losses, so you don't feel any obligation and any regret later. And traders, unfortunately, they get frustrated whether they win a trade, whether they lose a trade. Example, here, bearish engulfing. Let's say a good trade double signal, but at support, it's a low probability trade. You sold there, or you are still holding a trade from here. Let's say you sold this one, and you are holding this trade up to here. And at some point, the price moves like this. you moved your stop loss here, you are still in a profit, you made a good profit, but your stop loss get hit and you are out of the trade, and then the price breaks below. You won and you are frustrated because you didn't make more. Another example, you close a trade here and with this bearish engulfing, and today price breaks beyond the support and traded up to the next available level. And you are frustrated because, oh my God, I closed the trade and now it's moving without me. And why I listened to this guy Theo on the webinar. The other example, and so you won and you are frustrated, you still won a little bit and you are frustrated, you lost and half of the position, you are still frustrated, and this is endless. Frustration, either with a winning trade or with a losing trade. And the problem is because retail traders, they want to think that they can move the market, and they want the market to trade accordingly to their needs. And it's always frustration when you trade. Okay, so understand retail traders, why they don't see success in the markets. Most of them, they don't find success because they try to behave and trade like the market movers, like the professional, like not the professional trader, like the trader who has billions on a Forex account, and it can potentially move the price. Okay, so it was an opportunity, let's say, from here to there, but on the daily chart, the reward to risk wasn't favorable. We could go to the lower time frames and try to intraday only selling, not buying, because the predominant market force is to the downside. Okay, that's how we also trade intraday. We find the direction, we find something that indicates price might continue to a downside, and we try to trade in and out only on that direction. Okay, that's a high probability intraday. Next one, Australian dollar against the US dollar. We were expected to see price to stop and reverse here. On the lower time frames, though, on the 4-hour chart, price broke above the resistance, so no tradable opportunity. Back to the daily chart, market may come and retest these areas of resistance because there are strong areas of supply at this point, and then it will continue downwards. A nice tradable opportunity yesterday arose on the New Zealand against the US dollar. 4-hour now time frame correlation, very, very high probability trade. Daily is moving downwards, lower highs and lower lows. Identified level of resistance, multiple resistance here. There is a downward channel that could be fit nicely on the price action. That's the daily chart. We identified that price moves towards this resistance. We anticipate in trading. We don't react on the price move. Price action right at the sweet spot on the 4-hour chart. Nice tradable opportunity. Entry, stop loss, 221, 321. There you go. On the hourly chart, it was this stopped and reversed here. So again, on the hourly was a signal as well. USD JPY. Remember yesterday we analyzed this and we said after the breakout, the breakout didn't occur, and with this reversal signal, maybe we can see the price to come all the way down. On the 4-hour chart though, or on the hourly chart, after the price breaks, they were one bullish engulfing actually, but I wasn't around and I wasn't planning to trade this, to be honest. So I'm just showing you ways to attack the market based on your availability. Next one, USD Canadian dollar. If someone was listening, pay attention to the webinar yesterday. We could anticipate the false breakout. Guys, if you need to understand again, please play the webinar we did yesterday. We said we are anticipating a false breakout at some point. And there was the false breakout. Price traded higher during the New York session. It slammed back with this bearish candle on the hourly chart and start trading lower. USD CHF weekly chart, as you see, it's in a strong downtrend. Price managed to retest this area of confluence between a resistance and the 10 period moving average. On the 4-hour chart, or it was nothing. On the hourly chart, again, was nothing. Yesterday, it wasn't a tradable signal at an identified opportunity here. We understood that we prefer to sell, but we lack the trading signal. Should we have sold? No, because that's not what we do consistently. We look for price action. We want to see some false breakout in the market. Guys, I hope that your understanding through this webinar is getting better and better and better. And if you learn how to, the way I explain you now, when I say if you learn, I don't expect you to go somewhere to learn. I'm explaining you exactly what the dynamics are. When you accept that you have to anticipate rather than react to price move, you're going to experience trading from a different mindset. Next one, euro against the JPY. Here is the congestion. Price didn't manage to break to the upside. Yesterday it broke and made a new low. If we consider that that's a new low because we have, let's say, a higher high, so this is a lower low, and we can look for weakness, and I will be happy to trade it up to this level here. So if you are an intraday trader, up to this level here, actually, that's what I will be looking to do with this one, because now there is clarity. It was no purpose to trade this dark cloud cover price action signal because it's right at support. So why to sell the support? I will let the professional traders to sell this support. Professional traders, sorry, the big funded trader to sell the support, show that the price is trading below, and I will identify room of opportunity to go and capitalize either on the 4-hour chart, 1-hour chart, 15-minute chart, 5-minute chart, wherever I trade. Okay, couple of tradable opportunities here. That's all. We call it for this market. We look for the next market, or we look for the next opportunity. If price breaks below, we can continue to trade it to the downside all the way here. Guys, do you understand? Pound JPY. Now, price, yes, made a new low here, but it got rejected at the support. I'm not interested to sell it. Maybe it looks like that it's going to continue to the downside, but at some point you have to develop consistency in the market and to do the same thing day in, day out. And that's what I try to teach you here, because if you manage to do only one thing day in, day out, you're going to be mastering that particular trading environment. Next one, Australian dollar JPY. From the support, price continues upward. Yesterday, we commented at this doji candle here that if buyers, they were so strong, we would expect them to push upwards. Okay, but they got rejected at some point, and then they picked up from here. It's not in my restriction to understand what they're going to do, how they want to move the market. There were markets like, remember, we analyzed the Euro JPY. It was much more clear. Here it is, support, We said we anticipate reaction at support. Guys, even if you don't swing trading and you are intraday trading or scalping, by understanding the structure, let's say on the daily chart, what we do when we trade the DAX 40, we go on the daily chart and we find support resistance, then we go straight to the 5-minute chart. If we go to the 4-hour chart, it's to find some more meaningful structure. But I don't care about that. I go from the daily, usually to the 5-minute chart, and try to scalp 5, 10 pips, 15, 20 pips, whatever it's the amount, depends on the market you trade. So on the asset you trade. For example, a trader was looking at this market, identified there is a strong range market here, support, strong daily support here. We could go to the hourly chart and find price action. It wasn't there. We could go to the 15-minute chart to see if we can find the price action. Here it was a price action here. It was a good entry here. Look at this. Buy, stop, 2, 3, 4 to 1. Okay, 2, 3 to 1 is more than enough. Bam, that's it. You call it for the day, it's done. You don't need to prove anything to anyone. You just take some money out when they are available, and it's not because the price move all the way and retest is here, you have to stick into that trade. Okay, Larry, well said it. Anticipation, it's the word of the week. Exactly. You learn to anticipate. That's the only way, guys, to get out as a rewarded traders from the market. Let's check the DAX daily chart. Yesterday traded with these higher highs. Let's move to the next resistance. It's there. That was the support of the previous day. Let's see some congestion on the 4-hour chart. Nothing. So 5-minute chart. You spot higher highs, an indicator, lower highs. So I will place a buy stop order here. Buy stop for the continuation, for the break to the upside. And ideally, a sell stop below this low. So why I trade this every single day at the same time? Because the market will we have the privilege to be in front of the screen before the market opens, before the London opens. People in the UK, they will start working at 8 o'clock their time. We can place some orders and the market will react for a while right when it opens. So at the open, I would like to get in the market based on the technical structure. If it's going to break to the upside or to the downside, doesn't matter, because I would like to just get that impulse move, and that's all. Okay, so it broke to the upside. Let's hope it's a valid breakout. Guys, 10 points already made, as you can see. Yes, 10, 15, 12. I'm out of the trade. Close. So about 20 points I got this morning. It's still going, 24, 25 points. Market gives you money, and when the market gives you money, learn to take them. I'm not telling you to close your trades. I'm not telling you to open your trades. And it's not in my restriction to tell you what to do. I'm just here to make sure that you understand that when you trade, I want you to make money. I want you to respect the time and the effort you put to trade. And my main goal is to help you become the trader you want to become. Okay, And I never, ever met in my career, the last 12 years as a trader, nobody that trades without aiming to make money, okay? So learn to take the money out of the table as well. Hi guys, I missed many good mornings and questions. Let me read everything. You can still watch the DAX. We enter here and I took out the profit somewhere 17 or 20 points. Market is still trading on the 30 points. You see, sometimes in one good trade, we recover few days losses and plus we make on top. And because the strategy I teach you here, it wins much more than it loses many times. We have more winning trades than losing trades, and the reward to risk, it's not how this strategy is designed to be applied and implemented. Mogiel said, each time you say write it down, I write it down. Now I have about 184 pages full of valuable advice. Thank you for your knowledge. Good on you, Mogiel. Well done. Rumen said, Mogiel, that cost a fortune even now. Exactly, guys. Someone maybe will ask you for thousands and thousands of dollars to give you all this knowledge, and you have everything here for free. Danny said, hello guys, good morning from Uganda. Welcome to the webinars, Danny. Forex, copy trading, gold views. We will check the gold as well. Hayao said, good morning. Good morning, Hayao. Nick asked Theo, have you noticed yesterday's moves on DAX 1 hour before closing time over 60 points, unusual move? Yeah, that was really true. And Nasdaq as well did that explosive move. Guys, DAX is traded on the 46, 40, 50 points. But remember, correction will come. I'm checking the other screen, which I apply Bollinger Bands. Bollinger Bands, they show extremely positiveness, but I wouldn't trust to keep this trade for too much. Crepuside said, good morning, Theo, I'm just joining in. What instruments are you analyzing on? HV, thanks, Theo. You are very welcome, HV. Ruben asked, what is the moving average you like to use on the 1 hour time frame to trend? I will go with the 20 and 50 with the hourly chart. I wouldn't go with 9. And of course, an exponential moving averages. Soreen said, good morning. Good morning, Soreen. William said, good morning, Theo. A bit later because issues with login. That's fine. At least you make it. Theo, can you update gold? Please follow your views again. Awesome, William. Awesome. We will check the gold, guys, right now. Just bear with me for 1 minute. Ruben, yes, about the London Open. Larry, anticipation is a word of the week. Mladen said, what do you think about trading Dow Jones 30? The same like DAX in the start of New York session. I will prefer to look at the Nasdaq. Maybe I tried to test the Dow Jones 30, but I wasn't satisfied with the overall performance. That's all. So unfortunately, I don't have an opinion on that one. I thought I would have a good bias, but no, nothing. Maybe if you test it and you see for yourself how it works. Wow, DAX 50 points and keeps rallying. Guys, let's check the gold. From this support here, some people, they spot it. Then we said we want two things for a trend reversal. First, if we buy on the anticipation of a trend reversal, then we have to be very careful and understand that we need two things to occur. First is the price to break outside of a moving average or of a downward trend line if we are buying. So the first one ticked, and the second is to find a higher high and higher low. So far, it continues the rally. At this point here, I will see some sort of resistance. If you bought there with a stop loss there and you are on 2 to 1, 3 to 1, it's a very good trade and well done. Mogil said, Rumen, well said, exactly. Simig well said, thanks, Theo, you are very welcome. Still bullish on gold, though. However, remember the market always moves in waves. I won't say cycles, I would say waves, because they are a bit choppy. And the last one for today, WTI. Look at these guys. We were anticipating all this time. We were anticipating the move to happen. And sometimes it happens, sometimes it's not. I'm not saying it happens because we are anticipating. I'm just saying that high probabilities were indicating this head and shoulder pattern to develop. Now, it's a short-term head and shoulder pattern. Minimum target can be from the top to the neckline. So 60 points minimum target. It's about if the price breaks below this resistance, this support, the next support found it to be this one here, and that match with the minimum target. On the lower time frames, we can find some rejections here, 1 hour chart, 4 hour chart. Usually the WTI market moves at the New York session, and there is nothing wrong to find some rejection here and try to take some money out of the table. Again, remember, it's not needed because, look, we identified, guys, pay attention to this. That's the last one, and I have to end the webinar. And that's really important. We identified a high probability trade market structure, however you want to call it. And we see on the higher time frame that there are some parameters that they match together, like potential head and shoulder, break of the neckline. So we anticipate price to continue downward. There is a support here. So maybe this head and shoulder will fail at the end. Who knows? Because there is an obstacle here. Maybe at this time, because we are traders and we have the flexibility of the time frames, maybe we can go to the 15-minute time frame or to the 5-minute time frame and use some Bollinger Bands and try to apply Bollinger Band strategy. And we aim only to sell if an opportunity arises, because we identify this. We don't need to go, like you see on YouTube, to go to the lower time frame on a 5-minute chart from a daily to 5-minute and enter here with a stop loss of 10 pips and take 100 to 1 reward to risk ratio or 20 to 1. Okay, that's not how retail trading works. And all these smart money concept and all this stuff, again, that's how professional traders trade. But sorry, not professional traders by occupation, but professional traders in terms of capital allocation. But if a trader that trades $500 million on a trade without using leverage, doesn't pay any fees, doesn't pay any overnight or anything, okay, doesn't have these expenses, and it doesn't have a stop loss in the market, that trader can sit, or that firm can sit on this trade even if the price moves 200 pips above, and then it's going to snap down after 2 years. Guys, understand this. We are a retail trader here. We have to behave based on what's available at that point. We go in, we go out. if that go in and out, it's going to last 2 weeks or 3 weeks, or if it's going to last 1 day or 4 hours, whatever it's the amount. Understand. Okay. Guys, another webinar came to the end. I wish we'll have more time and cover more stuff. I would like to thank you so much for your participation. I hope you find everything valuable here. Happy trading if you're going to continue trading for the rest of the day. And I look forward to see you tomorrow at the same time. Thank you so much.